All right, we are live streaming this one. You might be watching this, some of you might be watching this after the fact, but there are many of you on this webinar here tonight. If you have questions on what we're talking about, go ahead and chat it into the thread. I can answer those. And hopefully you didn't have a seizure when this popped up in front of you and you're okay. You're okay physically and mentally and emotionally. I'm going to explain what this is. For those of you seeing this for the first time, this is what we've designed out of Sierra charts as a currency strength chart book. Now, what is a currency strength chart book? How would we use it? And then how would we use this one in particular? All right. And on this webinar, we're not necessarily, I'm already getting questions in. Can we discuss the Australian RBA statement tonight? I appreciate the question. I might cover that after this video because this is meant to be pretty much about currency strength. But after I cut this off, maybe we can jump on and have a discussion on that. All right. So you know what? This will be a very quick video. We'll jump off of this video here and we'll go into that. Okay, we'll do like a live stream or something like that. Let's get into currency strength here. So this is a current. In fact, you know what? Hold on, because I can edit this out. So not to glaze over anything. If you guys have questions on pairs, if you have questions on the RBA statement tonight, why don't we jump on a live stream just before 8:30? So I'm going to cut this off here in about. This won't take me more than 10 minutes for me to do this little lesson here. We'll cut this off and we'll go into a trade floor webinar. Sound good? Okay, let's get after it. All right, what you're looking at here is a currency strength chart. We've built this out of Sierra charts. Now, for those of you who had a seizure when you saw this, it's okay. It's a lot of colors, a lot of boxes, a lot of lines. I'm going to make sense of it for you here in a second. But I want you to understand the general principle here. We would prefer to take something that's strong, a currency that's strong, pair it with a currency that's weak, put those together and trade in that direction. It increases, it's like wind at your back, and increases your chances of being right. And we can do multiple things with that. We can use long-term currency strength to trade a direction like a swing trade or a carry trade or something like that. We can also use shorter-term currency strength to scalp smaller moves if we wanted to. So right now I've got this set to a 240. This is pretty good for day-to-day trading. And let me show you how we read this particular chart. Notice I've got columns. Over here I've got all the euro crosses. Here are all the pound crosses, Aussie, New Zealand, US crosses, CAD, Swiss, and yen. This is actually the order of pairs. It goes in this exact order. So how do you read this? These are Heikin-Ashi candles, but I don't want you to look at the direction. The direction's irrelevant. I want you to look at the color. I change the colors on these candlesticks because notice sometimes, if I can find a good spot, like look at this right here, New Zealand, US. See how they're cascading and they're going down? Well, shouldn't that be red if they're going down? It's actually green. I'll tell you why. What I want to do in this euro column right here is indicate if the euro is strong or if it's weak in general. So I've changed the color of the Heikin-Ashi to be green if the euro is strong against whatever currency it's being traded against. And I've ordered it to be red if the euro is weak against whatever currency it's being traded against. So notice euro is pretty strong against pretty much everything here, except red, a little bit of Swiss and yen. All right, let's look at the pound. Pound weak against pretty much everything. So according to this chart here, pound is probably the weakest thing that you've got here. Weak pound. So what do? You look for something that's strong. Well, you got some strong Swiss. So maybe you could trade the Swiss against the pound. So that'd be a pound Swiss trade. So you'd be, since pound is in first position, you'd be selling the pound Swiss. So go look for some signals to go short with that. Here's a yen over here. Notice the yen is fairly strong. It's weak a little bit, or it's just kind of battling side by side with the euro. It's a little weaker against the Swissy, right? But for the most part, you've got some strength here in the yen, which represents risk off. So you could trade CAD yen. You could trade pound yen if you wanted to scalp it in that direction. This is a great little tool for you to determine which direction you should be trading on a pair, or maybe you don't have a trade in mind. You come here to say, okay, what's strong, what's weak? You put that together and you go trade. So for instance, if I think the pound is relatively weak and the yen is strong, I could go to a pound yen, and maybe I just want to go scalp. Notice I have a bearish market, which I would expect a bearish market. And now I'm overbought. I'm overbought here in this bearish market. So I have a sell trade according to my 30-minute chart. It's ready to go. And there's 15 pips available there for me. If I wanted to wait for a trigger, I could go down to a smaller time frame, which I have a trigger here on the 5-minute chart. So I got a synchronization of cycles on my 30 and my 5. That's a sell trade. Take your sell trade right now, and you'd be going for 15 pips. Actually, it doesn't have to go down to there. 15 pips is, this is a pound yen. It really moves. It's basically a retest of this 141, just above it. That's all you'd have to do on that trade. It's ready to go. So that's how you trade currency strength, and that's how you read the currency strength chart. When we post this up, we'll post this up every day on the 240. I'm thinking of putting this into the download section inside of Slack. So you can download this to your Sierra charts. You can come in here and change the time frame. Just know if you change the time frame here in one of these pairs, it changes it in all of them. So if I went from a 240 down to a 30-minute to try to get really, really fast, speedy currency strength, I could change this right here. Any of them. If I right-click and go to, just any chart, I can go to chart settings. I can change this 240 to a 30. It would change the rest of them to 30. Okay, just be aware it's going to take a minute for it to load up because this is a lot of data in here. All right, so you can play with it as you see fit. That's the currency strength chart. All right, guys, if you want to stay on with me, because I can break it off at that point, instead of creating a whole new webinar, if you're still on, let's talk about the Australian announcement tonight. I posted up inside of Slack. I can delete that all in post. I'm pretty sure I posted this up in, maybe I didn't post this up in Slack inside the Aussie channel. Maybe I just brought up the story. There's Swissy. Where's Aussie? Oh, maybe I didn't. So, we had the FX Street story. There's a couple of others that talked about. They're not expecting a rate cut or a rate move, but they are expecting a dovish tone, which could weigh down on the Aussie dollar. Now, this morning in Bulls and Bears, we talked about the potential direction or the potential support and resistance areas for the Aussie dollar. If there's another Aussie pair that you want to look at, feel free. We could, chat it in. But I believe if this is going to weigh heavily on Aussie, you're very likely to be making a move down towards this support level, which we identified this morning, 66.50, 66.51. That's pretty close. If this is really bad news, this is your target down here around 66 even, the psychological level, which is right next to that weekly S2. I don't know if I expect this because, again, you're not making a change of rate today. You're just having a dovish tone in your statement and in your presser. So, we could see a move down to here, I think. I'd be surprised if a bigger move pushed down towards this area tonight. This is the plan. So we're still bearish on this overall because we've been in this bearish market. As a bear, it's kind of hard to sell right now because you're oversold, right? You're oversold on your charts. You really would like to see a pullback of some kind before you re-engage too heavily. Your daily pivot trade is short. It's probably already hit, it's already hit its target. So you're already out of that. I'm trying to think of some more reasons to get in short, aside from the fact that you might have some volatility from the news announcement going short. I'll tell you this, if the news announcement sneaks up for some reason, it's going to experience a lot of really hardcore resistance right in through this area. That'd be a great place to sell this thing. Great place to sell it. Likely going to come back down here and do a retest of this area here if we hit that spot. So in my opinion, the likely scenario is probably this one right here, where we make a move down towards the support level or beyond. This is probably the most likely. Less likely, a bullish move is probably going to jump up towards this spot up here, 67.35, 67.30, just below this 38.2, because that's a weekly pivot that's sitting right there. But somewhere in this zone, you could pop up there if there's, for some reason, if they're if they're hawkish. But then you're going to get rejected off of that, and you're going to come right back down. That's very likely. Or two. This is your most likely. If it goes up, that's your most likely if it goes up. How about that? This is the most likely overall, and it's the most likely if it's bearish. This is most likely if it's bullish, it's going to stop here and then come back down. You're not making a fundamental change in policy. They're not moving rates. If they do move rates, oh boy, if they cut, this thing is going down to here. You better believe it's going down to 66. We know they're not going to raise rates. The options on the table are this: to stay put or to make another rate cut. So there you go. There's your preview. Does that help you pipsqueak? Chime in if you're still on, because that one was for you. There you go. Hope you enjoyed it. Short webinar tonight, guys. Only a few minutes. But these FX cores, I really want a lot of these webinars to be short and concise so everyone watches them. A 1 hour webinar is kind of hard to find time to take it in. So we got what we needed done. We got it done quickly. Let's move on. Take care, guys. See ya.